how to build business credit for beginners and startups step by step. Because look, your business credit can literally determine how fast your startup can grow. Because your business credit is a clear signal of your company's ability to, handle finances, make purchases, and its current debts. And almost every bank, every lender, and every supplier will want to know what your business credit score is before they work with you. So it can affect things like your interest rates on small business loans, including SBA loans, your ability to raise money from investors, your terms and credit limits from other vendors, your contracts with other organizations, usually dealing with government contracts, and your business insurance premiums. But unfortunately, according to NAV, 82% of small business owners have no idea how to build their credit score. But I want to change that. So in this video, what I want to do is cover what business credit is and why it is so important, the things you can do and the major benefits of good business credit, and how to build business credit step by step. So if all that sounds good to you, then please do me one small favor and like and subscribe to my channel. It really does help me out. And if you do, please leave a comment down in the comment section below so that I can personally reply to thank you. All right, with that, let's go ahead and move into number one. What is business credit and why is it so important? Well, simply put, business credit is a credit score, but for your business. And so lenders will use your business credit score to determine your credit worthiness or your reliability as a business entity. And typically this is done by looking at all your business financial history. Now, all of that is very different from a personal credit score because, of course, a personal credit score looks at your personal financial history. So let's go ahead and do a side-by-side comparison of business credit versus personal credit. So a personal credit score is curated mainly by three reporting credit services or bureaus. And you've probably heard of them, right? You have Equifax, Experian, and TransUnion. And you as an individual will have a separate profile with each bureau. Whereas there are many different credit reporting agencies for businesses, with the largest and best known being Dun & Bradstreet. Also, personal credit scores are measured and scored differently than business credit scores. In general, the three credit reporting bureaus use the FICO method, which summarizes your credit score into one single numbers so that you and lenders can see your personal credit at a glance. And typically, personal credit scores will factor in stuff like your total credit accounts, your credit utilization, and the age of your total credit. On the other hand, business credit scores have no singular reporting method, and each reporting service will score and report in its own unique way. For example, business credit scores may be based off of stuff like, what industry you are in, how many employees you have, how many years you've been in business, like how long have you actually been operating, and so on. But in general, business credit scores have fewer variables than FICO credit scores, so it becomes a little bit easier to build business credit than it is to build personal credit. Now, another big difference is that your personal credit score is directly tied to your social security number, whereas your business credit score is linked directly to what is called an employer identification number, or EIN, which I'll talk about a little bit more later. All right, now that you know the difference, let's move on and talk about number two, why business credit is so important. So a good business credit score is important for two reasons. Number one, it is the best measure of how healthy and reliable your business is financially. And as they say, people lie, but numbers don't. So banks and other lenders will absolutely rely on your business credit scores. Number two, a good business credit score can give you negotiating power with vendors, suppliers, and landlords because, third parties may be more willing to work with you if they know you have a responsible financial history of making payments on time. Now, I believe your goal as a business owner should be to establish good business credit because, if you have bad credit, you will not be able to qualify for most small business loans, which can make it very difficult to start a new business. For example, you may need the money to acquire a new business, or maybe you need to purchase assets like equipment or vehicles, or maybe you want to invest into a physical location like an office space or a retail space. and so on. And not only will good business credit make these things easier to get and accomplish today, but there may be other unforeseeable circumstances where business credit may be useful in the future. For example, maybe you have a hot product or a booming service or an ad campaign that is generating a lot of results, but then you ran out of cash to buy stuff like inventory or hire people or just have more cash for ads. Well, in that case, you would be glad that you started establishing business credit early so that you can make good on those finances and make your dream become a reality. But the goal shouldn't be to just have business credit. You want to have excellent business credit, and I'll explain why in number 3, the benefits of having excellent credit. So first off, number 1, financing is cheaper. So if you want to get a small business loan, then having good credit will save you money in the long term. And that's because having strong business credit will qualify you for lower interest rates. And this can make a big difference over time, especially if you are taking out a long or large loan. For example, let's say that you are borrowing $100,000. If you have a credit score of 70, you might qualify for a 10% interest rate. But if you have a credit score of 80, you could qualify for a 7% interest rate on your loan. Now, that may not sound like a lot of money, but over a 5-year loan, that difference in interest payments will be worth more than $5,000. The second benefit is number 2, vendors may not require prepayment. So typically, if you're buying inventory from vendors on credit, then if your credit scores are really good, you can negotiate when you need to pay for that supplies or inventory. That's because vendors are more willing to extend terms to businesses with high credit scores, meaning that you don't have to pay for your inventory up front. Instead, you can spread out the costs over time, which can obviously help you to improve your cash flow. The third benefit is number 3, your suppliers and lenders may agree to better terms. Because if you're trying to negotiate with your suppliers, having a strong business score can give you some leverage. That's because they may be more willing to work with you if they know you're a responsible buyer and you have a history of paying on time. And that can end up helping you to talk down the price or extend longer contract terms with your vendors and suppliers. Benefit number 4 is separation of your personal and business finances. Because as small business owners, you may end up using your personal money to use for business. And that is very common when you start out your business. However, it is important to slowly start separating your business finances from your personal finances. And by establishing a business credit score, you start making this separation a little bit easier. And so you're able to report your income to the IRS and for tax purposes a lot easier, which is crucial for your small business. Benefit number 5, your business will be more financially stable. So just trying to implement the best practices of building business credit will ultimately make you more financially responsible and help your business in the long term. All right, let's move on to the 4th part of this video and talk about how to build business credit step by step. Now, ultimately, business credit is something that is built over a long period of time, but there are some key things that you need to do in order to start building credit as quickly as possible. Let's go through each step. Okay, step number 1, start your business. Sean, are you okay? Okay, maybe that one is a little bit obvious, but I do want to make an important note, which is you can establish business credit with any business entity, whether you are structured as a sole proprietorship, an LLC, corporation, and so on. All right, now let's move on to step number 2 and get your employer identification number. So as I mentioned, your EIN is like an SSN, but for your business. Now you should know as a sole proprietor, you don't need an EIN to operate your business, but you will need an EIN to establish business credit. And look, getting your EIN number is free and easy, okay? All you need to do is go to the IRS website, make sure you're eligible, do a quick application, and then submit. And then almost instantly, you will receive your EIN number and be able to move on to step number 3, which is to open a business bank account. Now, it's going to be very important, as we mentioned, to separate your business finances from your personal finances. And it's not just for the sanity of yourself and for your organization, but also for your business credit score. because bureaus will be able to clearly see your business finances and be able to report on that information when they're generating a business credit report. Plus, you may want to set up a bank account because it's not unusual for lenders to ask for your bank account information before proceeding with a loan. And so they like to see your accounts have been open for at least 2 years. And so I have an entire video on business bank accounts, which I'll link at the end of this one, so you can check that out if you haven't already. Step number 4 is to set up your business fundamentals. So every business should strive to have certain fundamental elements in place, like their business address, their business phone number, their business email, their service types, and even in 2022, their social media profiles. And having these fundamentals in place will allow you to list your business on certain directories like Google My Business or Yelp or the Better Business Bureau and much more. And so that's very important for your business credit because reporting agencies will scrape this information from online from these directories to help establish your business reporting history. All right, step number 5, apply for a business DUNS number. As I already mentioned, Dun & Bradstreet is probably the biggest reporting agency for businesses in the world. National and international suppliers will use Dun & Bradstreet credit scores to evaluate vendors and credit lines, so it's a good idea to open a credit file with this agency. Also, having a DUNS number may help you get approved when you're applying for government contracts or government grants and SBA loans. Now, it can take up to 30 days to get your DUNS number, so if you want to establish business credit as fast as possible, definitely don't wait. Now, step number 6 is to get a business credit card. One big thing that personal credit and business credit have in common is that you can build your credit scores up when you have strong payment history of paying on time, you have a reasonable debt to asset ratio, you have a couple years of credit history. And so one of the things you want to do as soon as you start your business is to apply for a business credit card and then start using that business credit card to pay for small business expenses so that you at least start establishing some type of business credit history. Now, depending on when you watch this, I may or may not have a business credit card video already out on this channel. So make sure you check the link in the description or the end card so that you can check that out after you finish. Moving on to step number 7, make sure you are borrowing from the right lenders. So before you make a final decision on which lender you're going to work with, you want to make sure that they actually report to a business credit agency. Ideally, you want to work with a lender that is reporting to some of the bigger agencies that we talked about, like Dun & Bradstreet or Experian or Equifax. Now, most of the largest financial institutions and banks routinely report to these agencies, but look, I know some entrepreneurs will search hard to find the lowest interest rates they can and will use local banks. So it wouldn't hurt to make sure you're asking a qualifying question like, hey, really quick before I sign, do you report to any of the major business credit reporting bureaus? So if you are stuck trying to figure out, okay, which lender should I choose? That can end up helping you make your decision. Okay, step number 8 is to don't overdo it. If you want to build business credit, then trying to raise the most money possible isn't ideal because, okay, using a lot of your credit limit can make your credit scores go down. And it's actually recommended that businesses not use more than 30% of their limit to show lenders that they can handle their money very, very well. Now, of course, if getting capital is more important than your debt or your business credit scores, then you don't want to prioritize that too much. But of course, that is something to be aware of. Okay, moving on to step number 9, I have monitor your business credit. Now, this doesn't directly tie into building up your score, but it can help reinforce your actions that, okay, you see you're moving in the right direction. So a good practice is to check your business credit report at least every 6 months, which is usually when you start seeing a good bump or a good increase in your score, while at the same time, you can monitor to make sure if you find an error, you can contact the bureau and then explain what is incorrect and request changes to be made, because even the slightest error in your credit can impact you in a major way. Now, there are a few places you can check out or monitor your business credit score. The most common place to check or monitor your business credit is on Dun & Bradstreet website. You can also get a free report from NAV, And this will help you to see where your credit stands and what you can do to improve it. Okay, step number 10 is to pay on time. So one of the most important things you can do to build your credit score is, of course, pay your bills on time. This shows that you can be reliable and trusted to repay any of your debts. And if you can, try to pay your bills early. This will help build your business credit score even faster, because credit agreements between you and your lender can be based off of whether or not you pay them back. And so the faster you pay them back, the more it helps improve your credit scores. All right, step number 11 is to build healthy relationships with vendors. So if you fail to pay your vendors and suppliers on time, then they can report your missed payment to a business reporting bureau, which will obviously decrease your business credit score. But look, sometimes these missed payments can't be helped, especially if you are tight on cash flow or your business is not profitable. That's why I think it's very important to build healthy relationships with your vendors so that you can communicate with them when you will be able to pay them back without them actually reporting you. All right, now let's move on to the 5th chapter of this video and talk about number 5. How long does it take to actually build business credit? So here's the deal, okay? Some people have been in business for years, but they have never properly followed the steps that I just went through in order to build up their business credit. So simple stuff like getting your EIN number and getting your business credit cards can go a long way. That being said, the answer to how long it takes is, it depends. But to give you some specifics, in most cases, lenders will want to see that you have at least 3 years of business financial history. However, it also depends on which lender you go to because, okay, some lenders may only require 1 year of business history. Now, you're probably thinking, whoa, it's going to take me 3 years to get the startup capital that I need? Well, not exactly. You see, if you haven't established business credit yet, then you usually can rely on your personal credit scores as well. But this brings me to a very important note, which is, okay, you may be required to do a personal guarantee on any business loan, business credit card, or alternative funding that you get, which means that you are personally held liable for repaying the business credit cards or loans, even, and this is important, even if the business fails. And so if that personal guarantee kicks in, then that would impact your personal credit scores, as well as the issuers will be able to attack your personal assets like your home or your cars. And that's the case even if you have an LLC or a limited liability company, which some people mistakenly thinks that protects them. And so without the personal guarantee, some companies, or maybe most companies, will not approve your application for a business credit card or a business loan because the risk of non-payment is too high for them. For example, here's a clause from the Platinum Card of American Express that says, by submitting this application, you, as the individual and the authorizing officer of the company, are agreeing to be jointly and severely liable with the company for all charges to the account. So you want to be on the lookout for this because, okay, if you are applying online or if you're working with someone who isn't very detailed, then this is something that you could be agreeing to without even realizing it. But listen, even if you have to do a personal guarantee, it can still help you start building your business credit up so that one day, maybe in 3 to 5 years, you no longer have to rely on a personal guarantee. All right, so there's your complete guide on how to build business credit fast for beginners and startups. If you enjoyed it, don't forget to like and subscribe for more videos. Coming up next, I have 2 more business videos you may enjoy, so check those out if you haven't already, and I'll see you over there.